The impact of flows on small cap mutual funds. The entire small cap space is being influenced heavily by the kind of flows into that space. In the month of March, we saw a lot of flows into the market. 20,190 crores was the flows into equity. Small cap had flows of 2,430 crores. But in April and May, the flows slowed down, but small cap flows did not slow down. So the total flows were 5,275 crores into equity, but small cap had 2,180 crores into it. Again in May, small cap saw 3,283 crores of inflows against a total inflow of only 2,906. What does it mean? It means there are outflows in other categories, but net flows of small cap basically saved the day. So there were huge inflows in May. June is again a bumper month. 5,472 crores is the inflow into small caps against total inflow into equity of 8,245. Clearly, what happens when flows happen like this? When flows are so high, fund managers are forced to buy. A very interesting point that you would like to notice is that fund managers were traveling with more cash 3 months ago than now. So, while flows increased, fund managers reduced their cash levels and were forced to invest. 3 months ago, at lower valuations, fund managers in small cap mutual funds were keeping more cash, hoping that the market will come down. What changed? Nothing changed. Flows increased, managers forced themselves to invest, and the markets went up in small caps. So, you as an investor must understand that flows are actually forcing managers to buy because they don't want to be caught with more cash in a rising market. And when they invest that money aggressively and quickly, that further bumps the market up, seeing that more flows come into this space, and this cycle is playing out right now. Is it healthy or otherwise? I leave it to your wisdom, but it is something which you need to be very, very conscious about before you invest aggressively into small cap mutual funds. Conviction, which was driving managers towards caution, simply reversed direction because flows impacted them so badly. In the sense, flows made them more convinced to invest, or they had no choice to invest. Which is true. Think about it. As an investor, I am not driven by flows or liquidity. I am driven by the merit of the individual investment decisions. But a fund manager probably does not have that luxury, especially when he is traveling with more liquidity or more cash in his portfolio and flows suddenly spike up. That is why some of the fund houses have stopped taking lump sums in their small cap schemes. I expect that they may even stop taking SIPs, or there could be some regulatory action to cool down this space. Clearly, there is a need to be cautious in the way small cap investing is currently done, and it is in the interest of investors to safeguard their investments in small cap mutual funds. The important data point in small cap mutual funds that you must remember right now is that they still have 11,817 crores of cash which they need to deploy, which is 7.7% of assets. So, some of the funds have very high levels of cash like SBI and Axis, and others have relatively lower levels of cash, but this cash is still waiting to be deployed and they're still having huge inflows. Now, I don't know whether this is a happy problem or a headache. Only time will tell, and let's wait to see what happens in this space. Thank you for watching this video.